oil was trading, I think even in our last discussion, I said I was generally bearish on oil, even though everyone was saying, oh, it's $115, $120 a barrel. It's going to go to 150 to 200. And the key is this, is that everyone's thought process for why it was going to spike was that Russia's oil wasn't going to be bought and put on the market. So you had this reduction in oil, big reduction in oil that was on the open market. And the reality of it is I clearly knew from past experiences with Iran that they just sell their oil at a discount to China, to India, to other countries, and other countries are more than willing to take that oil. So you weren't really removing oil off of the open market. In addition, the Federal Reserve tightening, the ECB is tightening, everyone's tightening interest rates. What does that do to the economy? It slows the economy down. So if you have a global slowdown, you know, OPEC just a few days ago was like, oh, we're going to cut 100,000 barrels of production. That means nothing when you have a global slowdown because you're taking millions of barrels of demand off the table. So I think that's the key, is to look at the economy, the economics of the situation, understand how oil's still going to get out there just at a discount anyways. And it just leads you to believe that I still think oil is going to go lower. You could be due for a bounce. In fact, if we look at the chart here, I always like to show my charts. You could see we actually did recently just hit this trend line, which again, you're seeing a bounce today. We're back to about $86.77. But I think this is just a bounce before we break this line. And I think you're headed into the mid 70s by year end. So I still think there's more downside. And again, it's going to coincide with seeing the economy in the US continue to signal recession potentially. And I think Europe's going that direction, maybe even worse than the US because of the natural gas crisis. And I think most of the world, I think China's already kind of there already due to what I'm hearing as well.
Right. So, okay, thank you for showing the chart there on oil. I think there is, despite the price going lower, there's interest in oil. And I think that ties into what's going on in the energy markets, right? People hear about the energy crisis in Europe. They wonder, will that spread elsewhere? So do you see a way to play energy right now, or are we at that part where it's, too hyped up? There's too much attention.
Yeah, so I mean, it's finally coming down into that, like that trend line we looked at. That would have been a quick trading opportunity where you go long for a week or two. But I think you have to just look at the economics of the situation and just be really, really careful. With the economy potentially headed towards recession, that's just a reason to be very careful about buying oil here. Again, shorter term trades, I think, are okay, but be very, very careful. And the other thing I'd point out on natural gas, right? Natural gas was basically guiding investors to expect downside. And I love pointing this out because it's kind of a different view to the retail investor, right? The retail investor is very focused on what is the news media saying, is the hype there, what's going on, Russia. And what we heard was a week ago from today, last Friday, we saw that Russia shut down Nord Stream 1 100%. And there was a 3-day weekend here in the US, Labor Day on Monday, and everyone was like, oh my goodness, natural gas is going to go nuts. And on that Friday, when they announced the shutdown, the stock market fell sharply, but natural gas did not spike. And when you see these disparities in price where fear of a spike is occurring, but underlying price is not spiking, you have to take that as, wait a minute, price is truth, not emotion. And it's going to sell off. And what happened then this week? Natural gas collapsed. So those little things to look for are very, very helpful for investors and traders.
Right. And keeping on that energy theme, I have to ask you about a favorite among our audience, which is uranium. We touch on it sometimes. I don't know if you follow it very, very closely, but I wondered, there's so much positive sentiment around supply demand fundamentals. But when you look at it from a technical perspective, do you also see that?
Yeah, so uranium's had an amazing move over the last 2 weeks. We're starting to hear about maybe some nuclear power options coming back. If we look at the chart, number one, I mean, this is just a beautiful thing, right? So you had this trend line here, and every time price hit it, come here, 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 it was a buying opportunity. So here what we saw is this downsloping trend line, you broke out. So you've had a short-term breakout on uranium, and this is the URNM, so it's the uranium ETF. But basically what you want to be careful of if you're a uranium investor is you are coming up to another resistance point on the URNM at around 86.50. So just be aware that if you get around 86, price is going to run into a roadblock and it may have trouble. You may get, that might be your level to see a bigger pullback. Now, how big of a pullback, I'm not sure. I think overall, this is a bullish consolidation macro pattern, which means the longer term is still bullish on uranium. But as a shorter term investor, you want to be very careful if price gets to 86, 86.50 and look for a pullback. As an investor, for me, I wouldn't be a buyer here because it's already rallied too much with very little reward left. So I would look for it to hit that level, pull back and consolidate, and I'd be looking to buy that pullback.
Okay, very helpful. Thanks for going over that as well. So we need to make sure that we look at gold. And I mentioned it's been, kind of a slow summer in the resource sector. I know that a lot of our audience is getting a little bit tired of hearing that gold has maintained its value. It's going to go up. You've told us, I think the last time we spoke, the latest kind of outlook for gold was 2,400, 2,500 within the next 12 months. So I want to check in with you on that, maybe hear from you on why we should still be believing in gold.
Yeah, so very, very true. And the number one thing is I think by year end, my price target as of the beginning of the year was about 2,400. That's not going to happen this year. I think you might get back to 2,000 and a half, which would be that high, that triple top high. But the dollar strength has just taken a lot of energy out of the sales of gold, right? So when the dollar goes up, gold generally reacts and goes to the downside. The only thing I would point out, and this is a really cool point about gold, is gold has still been an amazing performer this year. Number one, if you looked at gold in terms of euros, it's having a great year. If you looked at it in terms of yen, it's having an awesome year. In terms of the dollar, not so great. But even then, the dollar's rallied 15% this year, and gold is only down about 4 or 5% for the year. So think about that. In a normal market, if someone told me the dollar was going to be up 15%, I would be like, okay, well, gold should be down 15% then. The fact that it's only down 4 to 5% tells you that it's actually doing its job and holding on to its value very, very well, especially when you compare it to the S&P or Bitcoin or anything else. So I think, again, you have to just say gold is doing its thing. If the dollar, and eventually the dollar will pull back dramatically, then gold will have its big epic move here. What I love seeing is this sideways chop on the daily chart. This again is bullish consolidation, and eventually the probabilities dictate that this pattern eventually breaks to the upside. So again, it's not the sexy mover. We're not seeing those big moves in it, but in reality, it's actually been a very, very solid performer in spite of a really strong dollar.